Let's talk about something that affects every single one of us. Money. You know, the cash in your pocket, the numbers in your bank account. Well, what if I told you that the very idea of money is about to go through its biggest revolution in centuries? We're not just talking about another payment app. This is something fundamental.
Seriously, take a look at the cash in your wallet, if you even have any. Because in just a few years, a brand new kind of currency could be showing up in our lives, and it's called a CBDC. This is a huge deal, and trust me, it's going to change everything.
So what on earth is it? A CBDC, or central bank digital currency, is not like using Apple Pay, and it's definitely not a cryptocurrency like Bitcoin. Nope, it's something entirely different. It's digital money, yes, but it's issued directly from your country's central bank. So let's decode what that actually means, why basically the whole world is racing to build one, and what it could mean for you. All right, to really wrap our heads around what a CBDC is, we first have to quickly break down the money we're already using today. It's probably not what you think.
You know, right now, we basically have three flavors of money. First, you've got good old-fashioned cash, the notes and coins. That's a direct promise, an IOU from the central bank. Then there are bank deposits, you know, the money in your checking account. That's actually an IOU from your commercial bank, like Chase or Bank of America. And of course, there's crypto, private, decentralized money. Well, get ready, because a CBDC is about to become the fourth kind.
So here's the official definition, but let's just boil it down. A CBDC is the digital version of a country's currency. Plain and simple, you can just think of it as digital cash. But the key part is that it's issued, controlled, and fully backed by the central bank itself.
And this, right here, this is the absolute heart of the matter. The money in your bank account today is just a promise, an IOU, from a private company, your bank. A CBDC, on the other hand, is an IOU directly from the top, from the central bank. That means if your commercial bank ever went under, your CBDC money would be 100% safe, guaranteed by the government. And that is a massive, massive difference.
But here's the thing. This isn't some weird, theoretical idea cooked up in a lab. No way. This is a full-blown global race, and it is happening right now as we speak.
Just look at this number. It's staggering. Countries that make up over 90% of the entire world's economy are already exploring or actively building a CBDC. This isn't some niche experiment. It's a worldwide economic tidal wave.
And we're talking about the biggest players on the world stage. China is way ahead of the game with its eCNY pilot. India is already testing out its own digital rupee. And every single one of the G7 nations, the US, UK, Japan, Germany, they're all deep into development. So the real question is why? Why is everyone rushing to do this all of a sudden?
Well, it really boils down to three main drivers. First, we're all using less and less physical cash. Central banks are worried they're losing that direct connection to us. Second, it's a direct answer to the rise of private crypto. They want to offer a safe, official, state-backed alternative. And third, and this is a big one, CBDCs could make sending money across borders incredibly fast and cheap, totally changing global trade.
But of course, a change this huge doesn't come without a serious debate. There's an incredible amount of promise here, but there are also some very real, and some might say very scary potential dangers.
So let's start with the bright side. The potential benefits are pretty amazing. CBDCs could give millions of people who don't have bank accounts access to financial services. Payments could become instant and almost free. It could make it way easier to track fraud and illegal activity. And get this, in a crisis, the government could drop stimulus money right into your digital wallet, making economic policy way faster and more targeted.
But on the other side of that coin, the concerns are just as powerful. The number one worry? Privacy. If every cup of coffee you buy is recorded on a central government ledger, what does that mean for surveillance? Then there's the risk to banks. If everyone pulls their money out to hold safer CBDCs, it could completely destabilize the banking system. And then there's the most controversial idea of them all, programmable money. Just imagine this for a second. The government could give you money that has rules attached, money that disappears if you don't spend it in 30 days, or money that can only be spent on certain things like groceries or gas. Now you can see how this could be used for good, like targeted aid, but it also opens up a terrifying door for control over your economic freedom. So all of this massive global debate, it really comes down to something very, very personal. This isn't just about abstract economics. This is about the future of your wallet
and a fundamental choice that we as a society are going to have to make. When you strip everything else away, it all boils down to this one core trade-off. On one side, you have incredible efficiency and convenience. Think instant, nearly free, and perfectly secure payments, all guaranteed by the state. And on the other side, you have the privacy and freedom that we get from physical cash, the ability to buy and sell things anonymously, with total control over our own money.
And that leads us to the final, unavoidable question that we all have to think about. As we design this new future of money, what do we actually value more? The perfect efficiency and transparency of a completely digital system, or the absolute privacy and freedom of the cash we have today? The answer we choose is going to define our world for generations. What do you think?